Before we get down to the big businesses, let's also talk about the IT firm HCL Tech. Now that we are in earnings season after TCS, HCL Tech has posted this steady set of numbers in the first quarter. Profit has come in higher than expected, and this is helped by a one-time adjustment. The revenue and margin this time also beating expectations. Let's get more color on these numbers posted by HCL Tech, and for that my colleague Anisha Jain, who tracks the IT sector closely, is joining us on the phone line. Anisha, do tell us, for the kind of numbers that HCL Tech has posted for the first quarter, how's it looking for this IT firm?
Profit looks like a beat, but that is because of the one-off that I see, because the other income has shot up quite materially. There's a 1,100 crore other income this time around versus 400 crore that was their last quarter. So there is a bit of a, one-time element as far as the bottom line is concerned. Having said that, the constant currency revenue is down 1.6% quarter-on-quarter. We were penciling in a decline of 2%. So on the top line, the performance has been better as well. The U.S. revenue has come in at $3,360 million. That compares with my expectation of $3,358. So a smidge better, if I can call it that, versus my expectation. Revenue overall, 28050 was my expectation. The actual number has come in at 28057. The revenue largely in line with expectation to slightly better. Margin has held up at around 17%. Again, we are working with a number of 16.9. So in line with expectation there. And the profitability is looking better, but it seems like that is on account of the one-off income which I'm seeing. Now, in other details, the TCV of the new bookings is coming at $1.96 billion. Slightly lower, but not anything to get worried about, I would say, at the moment. But definitely something that we'll have to track, because for TCS as well, the deal win momentum was a bit lower. The company has maintained their guidance when it comes to the FY25 revenue. So the revenue guidance continues to be around 3 to 5% growth, which was the earlier guidance as well. And the margin too has been maintained at 18 to 19%. This was something that the street was largely penciling in, that the guidance will be maintained. That has been held as well. I'm also taking a quick look at the attrition figure. That's come down to 12.8%, and they've added almost 1,080 freshers as well. While overall, if you look at the net addition figure, it continues to be negative. So if I had to give you a summary of how the numbers look, well, they are in line with expectation. Nothing that looks like a big worry to me at this point of time.
Right, so it's looking all right, Anisha, and that helps, because as far as TCS is concerned, again, we saw them beat expectations, and the bigger question that we're asking is the IT sector now turning a corner? We got in a word from the management of HCL Tech about the kind of earnings numbers that they've put out, especially about the attrition in the first quarter and the kind of growth they're expecting in business in the third quarter. Just listen in to what we got from them.
We expect to grow in Q2 with all verticals and geographies seeing a sequential growth except financial services. As you know, we shall have the planned impact of State Street divestiture on our revenue in Q2, and including that impact, we remain comfortable with our full year revenue and margin guidance as clients spend on GenAI and other emerging technologies are seeing some traction. We expect to meet the guidance through strong operational execution that we've demonstrated over the last several years. Our headcount at the end of the quarter was 219,401, a reduction of 3.6% from a quarter-on-quarter perspective. But a very large part of this reduction is attributed to the State Street joint venture exit that we had announced earlier in the quarter. On an LTM basis, that is last 12-month basis, our IT services voluntary attrition stands at 12.8%, amongst the lowest in the industry. Our headcount at the end of the quarter was 219,401, a reduction of 3.6% from a quarter-on-quarter perspective. But a very large part of this reduction is attributed to the State Street joint venture exit that we had announced earlier in the quarter. On an LTM basis, that is last 12-month basis, our IT services voluntary attrition stands at 12.8%, amongst the lowest in the industry.
If you like this video, then like, share and subscribe to ET Now.